Let's get our market master in now. Andrew Holland of Ambit Capital joins into our discussion on what is turning out to be quite a strong day of trade. Andrew, hi, good morning, and good to have you on our show. It just brings me back to, or rather takes me back to the report you wrote in September 2013, where you said that this could be the start of a bull market. In fact, 2014 is the year to reckon with for India. Has most of the easy money already been made? Has most of the juice already been eked out of this market, or do you see a lot more on the upside from here on?
Fortunately, having the foresight to have said that in October, it's easy now to kind of sit back and say that that move has been made. But I don't think it has, because if I looked at the data at the end of March, April, and most foreign investors and domestic investors have not really made the switch towards cyclicals, and I think that switch will continue now for the next 6 months, away from defensives. Towards these sectors. So that I think that there's a lot to play out here. Whilst we're quite happy sticking with the cyclical sectors we have, this is a defining moment. This is a moment for India. And really the key now is, and I'm sure you're going to ask me what you think the index is going to do. And to be quite honest, I'm not thinking about the index. I'm trying to fast forward, although not too quickly because I want to enjoy the ride, to what India is going to look like in 3 years. So if I can get the key themes now and invest in them, and we have identified some key themes outside of that cyclical theme, which we will think will play out over the next 3 to 5 years. We think that having that foresight now is where we need to concentrate, rather than thinking about where the index will be in 2 years' time, because you're going to make a lot more money on this theme than you are just on playing the index. So that's where we're concentrating our efforts at the moment, and identifying the right companies to play this through.
Hi, good morning, Andrew. Can you develop that theme further? Rather than the index, which are the stocks you would concentrate on? Because, there is this unusually big rally that we have seen in banking stocks. State Bank breathlessly moved, and people are now upping that target to well over 3,000. So, which are the outperformers according to you?
Yeah. See, I think everything's going to be washed up all together in the next few months. Tonight we got obviously we'll find out who's taken over the government post, and then we'll look forward to the budget and expectations. I'm sure we'll run high on that. So the index can go higher. There's no doubt about that. But I think once we sit back and understand that there's still a lot of heavy lifting to be done, then we'll start to separate the real kind of winners going forward. So we're just, as I said, we've identified the theme which we think will play out over India in the next 5 years. We're now identifying the stocks and sectors which will benefit from that. So we've got excited about that prospect. I'm not of the view that PE multiple expansion will happen in India. I know a lot of people are saying this, because I think the defensive sectors will be derated over time. I'm not saying share prices will fall, but they will be derated.
In fact, Andrew, we are getting some source-based information of who will form, or rather who will take up the crucial positions in the cabinet, and it seems like Arun Jaitley is gunning for finance minister. How would the market react if indeed he's given that post?
I think the markets, has voted already in terms of the names that you've seen. Everyone's been speculating on. I don't think there's any kind of worries whether it's Arun Jaitley or Arun Shourie in terms of who the finance minister is. I think all we're after is to make sure that the budget is a sensible budget, which will continue to move India forward, and the policy statements will continue to play on the optimism which now India Inc. has, to move forward, and that's all I think people are looking for. I don't think everyone expects the magic wand across all industries, all sectors to happen overnight. But if we're in the right direction, that's really what I'm saying. It's India's moment. Is if I look across the world at other emerging markets, India is standing out significantly. China's got its own problems, and the rest of the emerging markets pale in significance when you think about the potential for India. And so, it's a great story. And as long as the new government doesn't mess up, which I don't think it sounds as though it's going to do, then we're going to enjoy very strong growth. But I would reiterate that our GDP forecasts of 5.5% and 7% for next year, 15-16, haven't changed, and we're unlikely to change those. So the only big call to think about now is when interest rates will fall, and we're still of the view that's a back-end second half story.
Actually, that is the big worry, isn't it? At least for me, Andrew. Arvind Panagaria, supposedly a man who advises the government, or at least is seen close to the BJP, has been speaking about a higher fiscal deficit as a boost to growth. Mr. Shauri, when he spoke to us, also said that keeping the deficit down is going to be very difficult. Now, Rajan's pinning his hopes on bringing down the inflation only partly on his own monetary policy. He's expecting help that the government is going to control fiscal deficit. Do you see a face-off here, and therefore an impossibility of rates falling, or something even worse, an overt battle between the two, government and RBI?
I mean, hopefully not. I mean, hopefully the new government's understood that the RBI is fighting something which is structural, which needs to change going forward. I mean, if India Inc. is going to grow and grow at the 7% GDP levels, then it has to get inflation down first. Otherwise, inflation will continue to remain very high, and that will keep the big foreign direct investors away from India in the very short term. So it needs to be tackled. I don't think we need to kind of think about a face-off between the two. I think the two can live side by side in terms of the growth strategy for India, which is more towards manufacturing, I think, going forward, and maybe tweak around in some of the the low-hanging fruit like FDI insurance and so forth, and GST, which will all be helpful going forward. So I don't see that face-off. What you could have working in your favour, obviously, is if the currency remains strong or gets stronger, is that obviously is going to bring down imported inflation into India, and that gives you some breathing space to think about interest rates towards the back end of the year. But it's all about getting food supplies into India. Obviously, we have a monsoon, which is going to be important. But really, I think if you ask India Inc. today, do they need interest rates to come down? I think they'd be more looking at where the growth is going to come from. If they can see growth, I think they'll live with higher interest rates in the very short term.
No, that's a point that Reserve Bank has been making, that high rates is hardly the reason why people are not investing. You were speaking about banks, so let me get a little more thoughts. If you can mention names itself, or at least your preference over private and public. There is that Nayak report. Are you expecting more professionalization in bank boards, stake cuts, anything that would make banks a seminal story, a huge story, a quantum leap from here on?
I think the banking sector has always been a huge story. Unfortunately, the PSU banks have, every time a new manager takes over, they throw the kitchen sink out with all the problems that they've had before. So, you're never sure if the earnings were ever any good anyway. We've been surprised that the banking sector moved higher, to be honest. I mean, we've rented in the sector. We still don't want to kind of own it yet. But we're becoming more warm towards the private sector banks because, they've weathered this storm of the last 5 years very, very well. And, they're going to continue to benefit from obviously the economic improvement that we're all hoping for. I think PSU banks, obviously have to change the strategy, have to have more accountability in terms of, be able to sustain their kind of profitability and their loan books, rather than each quarter or when someone new takes over, we have a kind of a big throw out of all the problem loans. So I'm not. I can't say I'm overly convinced about banking. So we'll kind of rent, but private banks is where I'm going to stick at the moment. I don't want to play on what could happen in PSU banks going forward. Let it happen and let me see what it all means, rather than try and work out that or speculate that it is going to happen.
Okay. So since we are talking sectors, Andrew, I just wanted to comment on one point that you made earlier. You see defensives perhaps getting derated from here on. So what do you do with some of these IT names? Infosys, Wipro have already fallen about 10-12% since the start of the year. Do you move out of them completely and move into cyclicals, or do you still hold a significant chunk of your portfolio in the IT names?
I mean, for our fund, which is the long-short fund, fortunately, I don't need to own any of the defensive sectors. And obviously, you know, a mutual fund would have to have some weightage, so they might well be underweight these sectors. But, you know, I just don't see a need to buy a, you know, I love the company, Nestle, at, you know, 40, 50 times with hardly any growth in earnings, where I can look at the, you know, in India, you know, 3 years hence and see companies and sectors where, you know, it's going to be an earnings explosion because of things I've talked about before in terms of operational gearing, and you throw in financial gearing as well, maybe in 2015, and there's a great earnings story out there, which is really not in the defensive sectors. You know, they'll continue to grow, but if you look at all the results, it's all to do with lower ad spends. Rather than expansion in terms of market share or volumes. I mean, within sectors, there's obviously some winners and losers. So I think within the defensive sectors, the way we want to do it is identify the next company in the next 3 to 5 years, which will, you know, be a much larger company. I mean, even when you had the bull run between 2003 and say 2007, you still had as an example, a Glenmark come through the pharma sector as a very large company. So there will be companies in the sector, but as a sector as a whole, I don't need to own it, and I don't want to own it.
All right, Andrew, on that note, we'll let you go. Thanks for joining us and talking about all the sectors that one should actually be focusing on right now.